now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything.
In 2025, Bitcoin's market cap soared past $2 trillion, yet Warren Buffett still calls it rat poison squared. Why does one of history's greatest investors reject an asset that millions swear by? Simple: it creates nothing, earns nothing, and survives on speculation. With Bitcoin more dominant than ever, is Buffett missing out, or does he see a risk the rest of us don't? Let's break down his brutal take on Bitcoin and the lessons every investor needs to hear. Before diving into his thoughts on Bitcoin, let's take a moment to understand who Warren Buffett is. Often called the Oracle of Omaha, Buffett is one of the world's most respected investors, renowned for his ability to spot long-term value and his focus on businesses that generate consistent earnings. Over the course of his career, he's turned a $100 investment into a $100 billion empire with Berkshire Hathaway. But despite his immense wealth, Buffett's investing philosophy has always been rooted in caution, discipline, and a rejection of speculative bubbles. Warren Buffett's stance on Bitcoin is rooted in its speculative nature, which sharply contrasts with his investment philosophy. Unlike traditional assets such as stocks or real estate, both of which generate reliable returns and possess intrinsic value, Bitcoin is driven mainly by market sentiment and speculation. It's an asset that thrives on volatility and unpredictability, without the steady fundamentals that Buffett typically seeks in his investments. As Buffett often points out, if you don't understand it, don't buy it. He argues that unlike businesses that produce profits or real estate that generates rental income, Bitcoin doesn't produce anything tangible. It's not a company that earns cash flow, nor is it a piece of property that can be rented out. Instead, Bitcoin's value relies solely on the belief that someone else will be willing to pay more for it in the future. This reliance on speculation, rather than any underlying value, is what makes it a dangerous gamble in Buffett's eyes. In his words, Bitcoin is a mirage, basically. For Buffett, this speculative aspect makes Bitcoin a worthless asset, one with no real foundation to stand on. Without productive value or the ability to generate income, he believes Bitcoin is nothing more than a speculative bubble that could eventually burst. For investors seeking stability, Bitcoin's speculative nature is a serious warning sign. Warren Buffett has long cautioned about speculative bubbles in various markets, and he sees Bitcoin as the latest example. Drawing parallels to past bubbles like tulip mania in the 17th century or the dot-com bubble of the late 1990s, Buffett argues that Bitcoin exhibits all the warning signs of a speculative frenzy. These historical bubbles were marked by astronomical price increases driven by hype, only to collapse when reality set in, leaving investors with massive losses. In Buffett's view, Bitcoin follows this exact pattern. Investors are lured in by the promise of quick, enormous profits, but they are often overlooking the fact that Bitcoin, unlike productive assets such as stocks or real estate, has no inherent value or underlying income stream. The fact that people will speculate on something as crazy as Bitcoin is a sure sign that we're in the midst of a speculative bubble, Buffett has said. He warns that when the bubble inevitably bursts, those who were caught up in the mania will face significant financial losses. It's just a matter of time before the market crashes, he adds. Buffett has always been skeptical of assets that thrive purely on speculation, and Bitcoin, in his eyes, is the quintessential example of this type of risky investment. Ultimately, he believes Bitcoin's lack of fundamental value makes it a dangerous, potentially worthless asset when the speculative euphoria fades. Warren Buffett's opposition to Bitcoin goes deeper than just its speculative nature. It lies in its lack of productivity. Unlike traditional investments that generate income, dividends, or cash flow, Bitcoin does none of that. It's not a business that creates products or services, nor is it a tangible asset that benefits society. Buffett has always focused on investing in companies that add value by providing real, useful products or services. Bitcoin, however, doesn't serve that purpose. It is primarily viewed as a store of value, but without the productive fundamentals that Buffett believes are essential for a sound investment. Buffett's strategy has always been about building wealth through assets that produce something of real value. As he famously said, "If you buy something far below its intrinsic value, you're going to do well in the long run." Bitcoin, in his eyes, doesn't meet this criterion. While its value may fluctuate wildly based on market sentiment, it doesn't produce anything tangible or generate income streams. For Buffett, a productive asset is one that not only holds value, but actively contributes to the economy. Bitcoin, by contrast, is simply a digital commodity with no intrinsic worth or societal contribution. It's what Buffett calls a non-productive asset, something that relies entirely on what someone else is willing to pay for it, rather than creating value on its own. The best investment you can make is in your own abilities, he advises, and Bitcoin, in his view, doesn't meet this fundamental principle. One of the critical issues Warren Buffett highlights when it comes to Bitcoin is the irrational behavior driven by fear of missing out. This mindset often pushes investors to jump into markets like Bitcoin without fully understanding the risks involved, merely because everyone else seems to be doing it. Buffett frequently advises against following the herd without doing thorough research, emphasizing the importance of being patient and calculated in your investment decisions. In the case of Bitcoin, many investors are swept up in the excitement of a potential revolution, believing that missing out means missing an opportunity of a lifetime. However, this kind of thinking clouds judgment and can lead to risky, impulsive decisions. Buffett warns, the most important quality for an investor is temperament, not intellect. This highlights how critical it is to maintain a level head, especially when everyone around you is chasing quick gains. For Buffett, the FOMO mentality is a red flag. He sees it as a sign of speculative mania, similar to what's been seen in previous financial bubbles. Instead of focusing on the long-term fundamentals, investors driven by FOMO are often chasing short-term profits, something Buffett believes leads to disaster in the end. He advises, don't buy something just because it's popular or because other people are buying it. For Buffett, disciplined, thoughtful investing is the key to success, and Bitcoin, in its current form, doesn't align with that principle. Before we continue, take a moment to like this video. It helps us grow and motivates us to bring you even more insightful content. Now back to the video. Proponents of Bitcoin often argue that it's a safe haven during times of economic uncertainty, likening it to gold as a store of value. However, Warren Buffett strongly disagrees with this perspective. While he acknowledges Bitcoin's growing popularity and mainstream adoption, he argues that it remains a highly speculative investment, not a dependable shield against financial crises. In Buffett's view, Bitcoin's volatility makes it unsuitable as a store of value, particularly during times of economic turmoil, when investors typically seek stable assets to protect their wealth. Buffett's stance is rooted in the fact that Bitcoin lacks the fundamentals that traditionally back sound investments, unlike gold, which has been a proven hedge against inflation and recessions for centuries. Bitcoin's price is unpredictable and driven by market sentiment rather than any intrinsic value or productive output. You can't value Bitcoin because it doesn't produce anything, Buffett frequently states. This highlights the central flaw in the idea that Bitcoin can serve as a reliable store of value. Its worth is based purely on speculation, with no underlying asset or income generation. Gold, on the other hand, has tangible uses: jewelry, electronics, and a long-established place in financial markets as a store of value. Bitcoin, however, lacks such fundamentals, making it more prone to wild swings and speculative bubbles. In Buffett's words, Bitcoin is a delusion, a dangerous gamble, and its price volatility proves it. When comparing Bitcoin to traditional investment alternatives like stocks or bonds, Warren Buffett remains firm in his belief that productive assets are far more reliable and advantageous. Stocks, for example, represent ownership in companies that generate consistent profits, pay dividends, and contribute to the broader economy. Investors in stocks benefit from a company's growth and the long-term potential to receive income through dividends or capital appreciation. Bonds, although they typically offer lower returns, provide predictable interest payments and are backed by the financial stability of governments or corporations, offering investors a sense of security and income flow. Bitcoin, however, offers none of these benefits. It's a purely speculative asset with no intrinsic value or underlying cash flow. Its price is driven by market sentiment, and its volatility makes it a risky and unpredictable investment. He points out that Bitcoin doesn't generate profits or dividends like stocks, nor does it offer the stable returns of bonds. Instead, Bitcoin's value is solely dependent on the belief that someone else will pay a higher price in the future, which makes it fundamentally different from traditional investments. For those seeking to build wealth in a sustainable and predictable way, Buffett argues that traditional investments like stocks and bonds are far more reliable, offering long-term growth with lower levels of speculation and risk. Warren Buffett has long championed the virtues of patience and discipline when it comes to investing. His approach is focused on buying companies with proven, reliable earnings and holding on to them for the long term. Buffett believes that this strategy minimizes risk while maximizing returns over time, as it allows investors to benefit from the steady growth of solid, productive businesses. He often emphasizes the importance of investing with a long-term view, saying, "The stock market is a device for transferring money from the impatient to the patient." Bitcoin, by contrast, embodies the exact opposite of Buffett's philosophy. Its speculative nature and extreme volatility make it a short-term play for many investors, driven by the fear of missing out on potential gains rather than a disciplined approach to building wealth. Unlike stocks or real estate, which appreciate over time through consistent performance, Bitcoin's value fluctuates wildly based on market sentiment. Buffett views this as a dangerous game, where investors are chasing a fleeting opportunity rather than focusing on sustainable wealth creation. For Buffett, investing is about buying solid, productive assets that generate income and will perform well over decades, not riding the wave of the next big speculative trend. As he famously said, "Our favorite holding period is forever." This approach has served him well over the years, while Bitcoin's speculative allure could ultimately lead to significant losses for those driven by short-term greed. Does Warren Buffett's skepticism mean Bitcoin is off-limits for all investors? Not necessarily. Whether his advice resonates with you depends on your financial goals, risk appetite, and overall investment strategy. Buffett's caution comes from his unwavering focus on stability and long-term wealth creation. If your investment objectives align with these principles, his criticisms of Bitcoin may feel particularly relevant. Buffett champions productive investments such as businesses, real estate, and farmland, assets that generate real value over time. These types of investments offer consistent cash flow, tangible benefits, and long-term growth potential. Bitcoin, on the other hand, thrives on speculation and market sentiment, with its value fluctuating dramatically without the support of underlying fundamentals. Buffett's investment philosophy is grounded in patience and reliability, believing that wealth is built steadily through thoughtful, disciplined choices. Do not save what is left after spending. Spend what is left after saving, he frequently advises, underscoring the importance of disciplined financial habits. However, for investors with a higher tolerance for risk and an interest in emerging technologies, Bitcoin could offer a high-risk, high-reward opportunity. If your strategy revolves around capitalizing on speculative assets, or you believe in Bitcoin's long-term technological potential, Buffett's warnings may not deter you. Ultimately, the decision is a personal one based on your financial goals and how you balance risk with reward. Warren Buffett's view on Bitcoin is clear. It's a high-risk, speculative asset that doesn't align with his tried and tested investing philosophy. While it may offer significant rewards for a select few, the risks involved make it a dangerous gamble for most investors. Whether or not Bitcoin is right for you depends on your risk tolerance and investment approach. But remember, investing should be about creating stable, long-term value, not chasing the next big thing. Thanks for watching. Check out our video, Why You Should Never Invest in Gold, for more insights. Don't forget to like and subscribe for more content that challenges conventional investing wisdom.